Yeah.
Me. Why don't you go ahead, type your first name and where you're from so I can say hello. I see Bill from Atlanta, Georgia. And I see who else is here? Roger from New York City, Tom, Virginia Beach, Virginia, Mike from Dallas, Texas, Nigel from Sydney, Australia. And who else do we have here? Okay, now the names are coming in. We see Tassos from Athens, Greece. Usually have people from about 150 countries in these uh, global summits. So I will get the show on the road here. Welcome to the Dotcom Bubble Part 2. Those of you who were in the market in the 90s can't help but recognize the similarities. And let me give you the warning to the similarity. The dot-com bubble went on for years. It really went on for 5 years. It went on for 3.5 years after Alan Greenspan said it was irrational exuberance. So those who think that we're ending the tech boom right here could be in for a rude awakening, and an even ruder awakening if you're starting to short the big tech stocks. Let's see. Okay. So, yeah, 1990s replay with the same results. And this is John Thomas, the Mad Hedge Fund Trader, broadcasting to you live from a beautiful day in Silicon Valley after the torrential rains of the last several days. So take out your pen and paper to take notes, or start typing into your smartphone. What I'm about to tell you will blow you away and change your life. For I am in the early retirement business, your early retirement. And yes, I do fly World War II Battle of Britain Spitfires, if you're wondering what that airplane is there at Biggin Hill in England. Why listen to John Thomas? Well, I have 55 years of experience in the global financial markets, 10 years as the economist correspondent in Tokyo, Japan, and later the White House, 10 years running the international equity division at Morgan Stanley, Marine Corps combat pilot in Desert Storm, 10 years running the international dedicated hedge fund, 5 years fracking for natural gas in Texas, and now 16 years publishing the Diary of a Mad Hedge Fund Trader. And I look forward to writing this letter every day, just as much as I did on the first day. I am probably the last one of the founders of the modern hedge fund industry who is still working. You're going to have to pry my cold, dead fingers off this keyboard to get me to quit. Of course, if you had this kind of performance, you wouldn't want to quit either. Up 60.43% over the last 12 months. That's more than double the 26% the S&P 500 brought in over the same time. And notice that we never go down. It's just up, sideways, and then more up. And last year wasn't a one-hit wonder. We actually have averaged 51.21% per year since we started using AI-driven algorithms 12 years ago, and they just keep on working. They worked especially last year when we had this big down move, and we just kept going up, up, and up. Helps to have some great algorithms on your side. Of course, this is our secret weapon, the Mad Hedge Market Timing Index. We call it the profit predictor. It's an artificial intelligence-driven algorithm that analyzes 30 different economic, technical, and momentum-driven indicators all day long. It took a team of mathematicians 1,000 hours of calculations to create this thing, and it has more than earned its pay. Why do you need an algorithm? Well, why use a toolbox missing its most important tool? Algorithms have become so dominant in the market, you should never trade without one. It does the work of a seasoned 100-man research department in seconds. It runs real time and optimizes returns with the addition of every new data point far faster than any human can. Imagine a trading strategy that upgrades itself 1,000 times a day. Don't go to a gunfight with a knife. If you're trading against algos alone, you will lose. Algorithms provide you with a defined systematic trading discipline that will enhance your profits. And this is the kind of results that our algorithm gives us. Every year we get several buys at market bottom, several sells at market tops, buy, sell, buy, sell. It's like having a printing press for $100 bills. And I'm not the only one using algorithms. Some 80 to 90% of all current trading is algorithm driven. You can tell from this yacht I saw in the Miami waterfront a few years ago. It's called Algorithm. Imagine that. Of course, this is a year of our market timing index signals. This is updated probably 10 times a day, every day of the year. We compress all those data points to give the major signals that we've had in the past year. And you can see we had a major buy here, a major buy here, and a get the hell out of the market here. And guess what it's telling us now? Well, I'll tell you shortly. But in any case, if you stick to this market timing index, which we are constantly upgrading, you can't help but make money hand over fist, more than you've made in your entire life, I'm willing to bet. So there is a method to my madness. The Fed is done raising interest rates. Markets are now discounting the first interest rate cut in May. All interest rate plays went wild initially, then went to sleep, including bonds, REITs, precious metals, and financial stocks. The bull market is continuing, but needs a break. Government shutdown is delayed until March 8. Markets love that. Oil prices and commodities are dead as a doorknob right now, are basically trading as one because they all depend on Chinese demand to prosper, which isn't there right now. And we don't know how long it'll be until the Chinese economy recovers. Tech bull market is back, will continue for years, possibly the rest of the decade. Time to go aggressively long stocks and bonds again is coming. And by the way, if you go back, look at our last major buy signal, that was on October 26. You will be hearing that date a lot in the coming charts because we essentially got a major buy signal on all asset classes all at once at the same time on the same day. That is what the market has become. So stocks, it is a big tech game and it's all about the data, which is the new gold. Q4 saw the fastest 10% market rise in history. Big tech was led with the AI 5 dominating, and that is Microsoft, Amazon, Google, NVIDIA, and Meta. And by now, you should have those ticker symbols tattooed on your wrist because you're going to be coming back to this group again and again for the rest of this year and probably the rest of the decade. For example, Meta tells the whole story. They cut their staff from 87,000 to 67,000 while increasing subscribers by 13 million and tripling their profits. Cutting costs dramatically while increasing sales is the magic formula. All of the big tech, or all tech companies, period, are now chasing that goal. Company share buybacks are about to surge as companies race to pick up their own stocks before they become even more expensive. Buyback should top $1.25 trillion this year. If you sell any of your stocks, chances are you're going to sell them back to the company itself, like Berkshire Hathaway does all year long. Apple is the top buyback stock, followed by Google and Microsoft. No surprise there. Regional banks got another scare as the New York Community Bank dropped by half in one day. The credit quality and commercial real estate problems really are affecting them more than anybody else. And that says stay away. Domestic plays have gone back to sleep on rising interest rates. So this is the arguments for what was in the market before and what's next in 2024. A year ago, we worried about high inflation, an oil shock, a labor shortage, supply chain headaches, Fed interest rate rises, quantitative tightening, and poor earnings. And what are we worrying about now? Well, plunging gasoline prices, rocketing commodity prices, stabilizing supply chain, record low 3.7% unemployment, better than expected earnings, $1.25 trillion in stock buybacks, falling interest rates, a weak dollar, and oh, did I mention it's an election year? And that is a longhorn steer, one of the last. They're only raised as pets now in Fort Worth, Texas, right next to Billy Bob's. We do have a trader's dilemma right now, this very second. We now have a choice between five stocks that have gone up in a straight line for 3.5 months, or a dozen interest rate sensitive sectors that may be dead money for 4 months. That's screaming no trade. Avoid the frustration trade. And that's the one you should have done on October 26th. If you've been reading my newsletter, you would have gotten in on October 26th. Loaded the boat, filled your boots, and gone maximum aggressive long. Wait for the ideal AI entry point, no matter how long it takes. Better to wait longer to do a great trade than to hurry up and do a bad trade. I watch people do this all day long, and I beg them not to do stuff. A big chunk of 2024 performance was pulled forward into 2023, and you made that money if you were a subscriber to Mad Hedge Fund Trader. The sole exception is energy, which is driven by demand from the Chinese economy. Good luck figuring out what that's going to do. The Chinese themselves have no idea what's going to happen to their economy. And you could do worse than just buying some 90-day T-bills. We urged people to buy 90-day T-bills a year ago when they were yielding 5.43%. We then urged them to buy stocks in October. Now those 90-day T-bills are still yielding 5.43%. If you don't know how to buy those, just send me an email. You essentially can deal in them for free. We have long tutorials on how exactly to play the 90-day T-bill market. So we do run barbell portfolios, which are 75% big tech. That's 2% of the U.S. workforce, creating 25% of the market cap and 25% of U.S. earnings. And then we have 25% domestic recovery plays, including railroads, airlines, cruise lines, couriers, steel companies, banks, commodities, construction, credit card companies, hotels, casinos, and online ticket sales. And NASDAQ has been far and away the lead index for the last year. It's all about the data, the new digital gold. And let me tell you why the gold is golden. For a start, I expect NASDAQ to hit 20,000 by the end of this year. That is a gain of 40% on the year, and we're already well into that. We've already made the first 10% of that 40% move in a month. So yeah, this shows you the signals sent out by our market timing index. Major buy here on, you guessed it, October 26th. For that, we were going short. We went short at the end of July, ran that short for a couple of months, came out on the 26th. It's been straight up ever since. And what this is saying, in the next substantial dip you get, wherever that is, that becomes a buy again. So you can capture the remaining 30% of this year's move. Okay. Let me take a look at the questions. Okay. Microsoft. What does Microsoft have that everybody wants? Well, for a start, they are the artificial intelligence leader with their ownership of ChatGPT. They also happen to know every keystroke you've made on your computer for the last 30 years. Microsoft never throws anything out. They know everything about you, even things that you probably don't want known. But that is immensely valuable information to have in the marketplace, no matter what the market is for. Meta, another good example, they know every social media post you've made for the last 20 years. They just tripled their profits on strong sales and a massive cost-cutting exercise. And Amazon knows everything you bought or even just thought about buying or surfed for the last 25 years. Turns out that is also tremendously valuable information for anybody who sells stuff. And Amazon only sells about 1/3 of their stuff directly from their own warehouses. The other 2/3 is from third-party marketers. Amazon probably keeps in business several million small online retailers, and this is the vehicle to do that. And again, buy signal there on October 26th, and it's essentially been going straight up. We're looking for $200 in Amazon by the end of the year, or a gain of about another 35%. NVIDIA, bet you've heard of this one. They have a global monopoly on the top end of AI graphics cards. Their sales are expected to triple in the next 5 years. We're looking for $1,000 a share in NVIDIA, up from about 670 or 665 today. And we actually have done 8 trade alerts on NVIDIA since October 26, and guess where those were? Buy the dip, buy the dip, buy the dip, buy the sideways move. And we made money on every one of those trades, and so did our followers. NVIDIA has been an absolute money machine since we first started buying this almost 10 years ago now, at $38 a share. And that's not even split adjusted. Alphabet knows everything you've searched for the last 20 years. Oops, better not let the FBI look at your search record. It could get kind of embarrassing. Turns out when the FBI arrests somebody these days, that is the first thing they do, is go search for their, go look at their search history, even before they arrest the suspicious people. Of course, companies are doing the same with your data, trying to figure out what you'll buy and how much you'll pay for it. We're looking for $200 a share. It's another 35% gain by the end of the year. We did have a tremendous start to the year, even though there was an earnings disappointment there. Any earnings disappointments in any of these AI5 companies is temporary at best. We got a buy here on October 26th. It's been straight up ever since. Salesforce runs the customer databases for most Fortune 500 companies and has dozens of data points about you personally, if not hundreds. Kind of scary, isn't it? That does make them a tremendously profitable company. We've already seen about a 50% gain since the October 26th bottom here. And we're targeting $400 a share by the end of this year. Palo Alto Networks isn't especially in the data company, except they have gigantic databases of viruses and hackers. Hacking never goes out of style. 3 companies have a near monopoly, and big customers have to buy from all 3 to stay at the cutting edge of hacking attacks and viruses. So we've been in this for more than 10 years, buying every dip. And our target for this year is $400 a share, or about another 40% up from here. So buy Palo Alto on dips. We got in last on the 26th. We have a call spread now that expires at the end of next week. Second half of the barbell bets on falling interest rates and a global economic recovery to begin in 2024. Upside potential for stocks this year is far greater for domestic stocks than tech stocks, because they're coming off such low bottoms. Some of these stocks have not moved for 5 or 10 years. Focus on economically sensitive cyclical industries makes a great counterweight to high growth technology. We could spend years rotating back and forth between these 2 sectors. Okay, by the way, if you have any questions, get them in. When I see a chance for a break, I'll start answering them. So, of course, the big domestic stock here is Boeing. Boy, have we had some volatility there. And even if Boeing planes are falling out of the sky, you still have to buy them, because there are only 2 airplane makers in the world. The other one is Airbus. So love Boeing or hate it, you still have to buy the airplanes and you have to buy the stock. And by the way, they are about to resume deliveries to China, where there is a 1,000 airplane backlog for Boeing aircraft. So Yeah, we probably are going to get a buy signal on this in the next month or so. And then after that, we're looking for $300 a share by the end of the year. JP Morgan is the quality value play in banks, which love recovering economies, falling default rates. They are hugely overcapitalized, moving into online banking and closing their expensive branch networks to cut costs. Yes, they've heard about cost cutting too. In fact, Citibank is currently laying off about 20% of their staff. Uh, Banks probably have more bloat than most industries and therefore more ability to create profits by laying people off and making those remain work harder or replace them with algorithms, for example. So JP Morgan is one of our favorites here. We've been in and out of this many times this year, making tons of money along the way. Visa, another great way to play online commerce. They capture a big chunk of all online purchases. And guess what? 15% of all credit card charges are for travel, and travel is absolutely booming, and the price of travel is going up. So you get a hockey stick effect on Visa earnings, and absolutely the stock market has figured this out, taking the stock up $50 since the October 26 bottom. So our target for Visa this year, $400, up from 275. Union Pacific, any economic recovery needs to move a lot of big stuff across the country. Union Pacific is the main east-west railroad, so it's also a China play, and it's not your father's railroad. The railroad is now essentially run by algorithms, just like it's a giant hedge fund. So the profits they've been able to extract from the business have been gigantic. Of course, if you want to move big stuff, you also have to move a lot of small stuff too. FedEx just had a big earnings setback. That's going to take us down to these new lows. You probably want to buy that double bottom right there. Excuse me, it's been raining a lot here. And our target for FedEx is $300, which will give you a decent return the end of this year. Berkshire Hathaway is the one-stop barbell stock, has a very heavy weighting in Apple. They're probably the largest outside shareholder in Apple. And they bought back $25 billion worth of their own stock last year, and they'll buy every dip again in 2024. So our target for Berkshire Hathaway B shares is $500. And that also is a 25% gain from here after a terrific start to this year. So that covers stocks. We covered all asset classes: stocks, bonds, commodities, precious metals, real estate, and energies. And stocks don't always offer the best trades around. Often you get it in the other asset classes. And of course, far and away, the biggest one is the global bond market, which is about $100 trillion a year market. Bonds continue on a tear with the TLT up a breathtaking $12 from the October low. Falling inflation is the big driver, down from 9% to 3.2% on its way to 2%, and the trailing 3-month inflation rate is only 1.5%. TLT could reach 120 from 2024, up from the current 95. Keep buying TLT calls, call spreads, and leaps on dips. Junk bonds, also a great play. Not only do you get falling interest rates, you get rising credit quality, and that takes the junk out of junk. Currently, we're getting yields of around 8%, 7%. For those who don't want to trade the market every day, that's a great alternative. 30-year fixed rate mortgages dropped to as low as 6.6%. We're targeting 5% by the end of the year. U.S. bond issuance to drop sharply in Q2 from $500 billion this quarter to only $80 billion in the next quarter. That takes a lot of selling out of the bond market, allow prices to float up, especially if the Fed cuts interest rates. Less government borrowing is building a strong floor under current bond prices. So here's the TLT. This is the 10 to 20-year Treasury bond ETF. Monster move here off the October 26th low, made it all the way up to 101, backed off to 93, challenging again the 93 low. Eventually, we go up to 120 by the end of the year, while earning you 4% along the way. And here is the yield. We went from 508 down to 380, back up to 420, and we're right back down to about 4% right now. So if you're looking for a yield play, this is the safest way to do it. Eventually, we're targeting 3.5% by the end of this year. That gets you your 120 price in the TLT. Foreign currencies, we are looking for the dollar to top out right here. Currencies are far and away driven by interest rates. We have the world's highest interest rates of the major economies. When those rates fall off, the dollar falls with it. That brings a crashing US dollar. All foreign currencies will rally strongly by the euro, the Australian dollar, the British pound, and the Japanese yen. Stay away from the Chinese yuan because the economy there is still very weak. They say they're growing at 5% a year. I think zero growth is probably more realistic. So stay away from all China plays, stocks, bonds, and currencies. Strong currencies will also deliver major bull markets in emerging market stocks and bonds. So those are the EEM and the CEW. Australian dollar had a huge run going into last year, backed off. This is the global call option on a recovery. Japanese yen has done the same thing. We're looking for a 25% gain there. Euro, we're looking for a 25% gain. And the British pound, we're also looking for about a 15% gain. That's the new King Charles pound coin, which I found when I was in England last summer. Emerging market currencies, we expect the biggest gains there, 40%. Now is a decent place to buy. Energy and commodities are a pure China play these days. The price has crashed from $96 down to 68 in 3 months as fears of a global economic slowdown continue. U.S. gasoline prices hit a 3-year low on recession fears and replacement concerns by EVs. Energy stocks are tracking. Let's get back to that page. Are tracking commodities to the downside, tick for tick. There's a buy setting up here somewhere when the global economy reaccelerates on a lower interest rate world. Watch ExxonMobil and Occidental Petroleum, which is Warren Buffett's favorite. Chinese imports have followed for 9 consecutive months. They're the world's largest importer. And the U.S. government is back in the oil business, providing a floor bid for the Strategic Petroleum Reserve at $70. So we probably won't get much lower than 70. U.S. has to buy about 300 million barrels to top up the Strategic Petroleum Reserve for the next disaster. Then we also caught the double in natural gas prices during the big freeze over Christmas. That was a quick 2-week in and out trade we did through the options market. So here's oil, still, looking to find its final low in this whole move. We've been playing from the short side, from the very top, looking to buy somewhere a little bit lower than here. And this is not a new downtrend. Oil has, in fact, been going down since 2008. We hit 150 there. We hit 120 here. Eventually, it goes down to $10 again. Actually, the futures market got down to negative 37 during the pandemic. We could revisit those numbers over the long term as oil eventually gets replaced by other energy sources. And let's see. Here's a question here. Is it time to buy Tesla? Answer, I don't want to touch Tesla as long as there's a price war going on in the EV market. And you can see this not only in the prices of cars, but also the prices of commodities like lithium and chromium that go into making EV. So that's a no touch until we get a definitive bottom. Long term, I think Tesla eventually goes to $1,000 a share. And let's see, just reading these questions. Should I invest in mutual funds for my retirement or do trading? That's a decision every person has to make. It just depends on how much work you want to put into it. Work in equal money out. That's what I tell people. If you want to go play golf all day, mutual funds are probably your better choice. You want to be more active in your retirement. Trading with a first-class trade service like this one is the way to go. Okay. Okay, let me move on here. Precious metals are in a new bull market. A massive silver shortage is developing, with demand up 16% in 2023 to 1.2 million ounces, with EV production increasing from 1.5 million to 20 million units a year. Within a decade, its share of the market will rise from 5% to 75%. Solar panel demand is also rising. You want to buy the silver ETF and wheat and precious metals on dips. And my next leaps will be for silver on the next dip. Gold will also be a good performer this year. We're looking for a 20% gain. Collapsing interest rates will be the big story here. Here is gold. We got this initial blast off from the October 26th bottom, picked up about 15%, and we've been trapped in a sideways move ever since U.S. interest rates started to back up again. But we are looking for 2,300 by the end of the year. And if you like gold, then you want to buy Barrick Gold, the world's largest gold miner. It has had a much bigger sell-off. You want to buy this dip. Barrick is now at $15. We're looking for $40 by the end of the year. That is a gain of about 160%. And you also want to buy the Silver Trust. We're looking for 150% gain there by the end of the year. And again, there's the October 26th buy from our algorithm. So don't play with matches. You could probably do okay buying all these stocks I mentioned above and forget about them. But the reality is that conditions for these companies change every day. They are all viciously competing, trying to put each other out of business. You don't get daily updates on the fundamentals. You could easily get wiped out. Today's big winner could instantly become tomorrow's big loser. I gained financial independence for life, and so can you. All of this can be yours. Discover how to make thousands of dollars a year in extra income. Go from complete beginner to seasoned pro in weeks. Learn how to quit your day job and trade for a living full time. Trade from anywhere, anytime. Supplement your retirement income with the satisfaction of booking winning trades by the hundreds. We do send out about 200 trade alerts a year. That's me sending out a trade alert from the coast of Morocco. And I'm trying as hard as I can to smile there because it is 820 degrees in the shade. The harsh truth is you really need my help. The majority of individual traders lose money. They lack the correct training and discipline to succeed. Most broker research suffers from grievous conflicts of interest. Wall Street is all about moving money from the uneducated to the educated. The easy solution to that problem is to get educated yourself, and we are in the education business. Fidelity did a 20-year study and learned that their top-performing investors were dead people. Why do dead people do so well? Because they never sell. They're never around to sell. And for the last 25 years, not selling has been a great way to play the stock market. This is the last financial advisor I had. It was actually an entire shop full of Pinocchios, which I found in northern Italy, where the Pinocchio legend originated. You need a real pro to guide you through the market maze. The market is not monolithic, and 95% of it can be completely ignored. There are a few great sectors and a lot of awful ones. You can earn a 10x return on the great ones, but get wiped out by the losers. Let a 50-year veteran steer you to safe waters. Let me sit next to you and guide your hand on every winning trade. This is our trailing 1 year performance, or actually our average annual performance for the last 12 years, and that is 51% a year. Most people are happy with a 51% a year profit. If they're not, you probably should consider some other line of business. And this orange line shows what the S&P 500 has done. It shows what we have done over the last 12 years. Richard made millions religiously following my trade alerts. He now spends his retirement restoring vintage aircraft and flying them over the California coast. Greg turned 100,000 into 1.5 million solely on my trade alerts. He bought a new home in Orange County, California with Tesla solar panels, Tesla Powerwalls, and a Tesla Model 3. Still had enough money to send 3 kids to college. And guess which stock he made all his money on? It was in Tesla. And here's my friend, Greg.
Hi, this is Bob. I live in Denver, Colorado, and hiking on top of the Continental Divide. 9 months ago, I joined John's Global Dispatch Service and was so impressed with the profits I made that 2 weeks ago, while hiking in the Dolomites, I joined his concierge service. And in 2 weeks, it is 100% paid for it, and I couldn't be happier. Life is good. John really helps. The other day, I had a text message exchange with him regarding some concerns I had with TLT. Put spreads, he encouraged me to stay in. I did, and today they went out at 95% of maximum potential profits. And that's the way it works for me. I hope you all do.
Okay, so thank you very much, Bob. I haven't done this in a while, so I forgot his name. So what do we do about this? Well, stocks, you want to buy the next dip. Bonds, you want to buy dips. Commodities, buy dips. Energy, buy dips. Currencies, buy foreign currency dips. Avoid the US dollar. And precious metals, buy dips. If you were not up 60.43% in the past 12 months, as I was, you are reading the wrong newsletter or following the wrong trade mentoring service. 60.43% trailing 1 year return versus 26% for the S&P 500. You get those kind of numbers, you get to do things that other people can't do, like take the Queen Mary from New York to England. When you get to England, you can take the Orient Express from London to Venice. Once in Venice, you can then go island hopping on your own personal helicopter. This is the very long view, and here's where the big money will really be made. The 2000s and the 2010s were the hard decades for making money. The 2020s and the 2030s will be the easy ones as a global demographic wave brings on a new golden age. 85 million millennials will become big spenders over the next 15 years, while 80 million baby boomers, a drag on the economy, fade from the scene. That will create an economic boom that will last another decade. It started in 2023. This is what happened the last time we had an identical demographic picture to today. We went up 20 times in 18 years from the 1983 bottom all the way up to the year 2000. Are you ready for a replay? Well, if you take those numbers and assume we started from the bottom in 2009, 20 times off the 2009 bottom takes us to 120,000 by 2030. Yes, that sounds impossible, up 250% in 5 years, but we've done 400% over the last 13 years. So we're just getting started. Oh, and by the way, we're right here, right now. If you assume that the last demographic push has the same effect on stock prices as this one, you're right here, right now, which means we only need to go from 36,000 to 120,000. That is one more triple left to get to that 120,000 top. Except this time it's different. We have the AI technology turbocharger. Technology is hyper accelerating on all fronts simultaneously, and the pandemic greatly sped up the rate of change. The development of a functional quantum computer means that computation ability is about to increase 1 trillion-fold at no cost. The world's major computational challenges will shortly be solved, such as weather forecasting and cancer cures. All major human diseases will be cured within 10 years. Live another decade, and you will have a shot at living to 150 years old. Needless to say, barbell stocks dominate in this scenario and will account for the bulk of stock market gains in our lifetimes. The 90s had cheaper computers, cheap operating software, and a new internet. The 2030s will have 10 times this number of new technology drivers. I see somebody put in a comment here. This is fantastic. Keep going. All right, I'll keep going. Who will show you how to play the next 90,000 Dow points? Sit with me, John Thomas, the Mad Hedge Fund Trader, and my Global Trading Dispatch. Discover how you can tap into the top performing trade mentoring service in the industry, up 60.43% in a decade. Follow my research and market-beating trade alerts, and you will rake the profits in. Let a Marine Corps combat pilot steer you to big profits. We trade single stocks and options and ETFs for global equities, bonds, foreign exchange, energy, commodities, precious metals, and real estate. And no, that is not the plane I flew in Desert Storm. I flew a somewhat larger plane. This is a 1932 de Havilland Tiger Moth. Notice the design flaws. Gas tank directly over your head and no brakes. It had a tail skid, so you could only land on grass fields like this one in Cambridge, England. This trading record can be yours. This shows you the kind of trades that we do. You can see we bought the S&P 500 for a 16% profit, sold short treasuries and made 8%, made 14% on the Russell 2000, 12% on Amazon, 7% on Apple. We stopped out of a position on Biogen. We stop out of losers very quickly. Easier to dig yourself out of a small hole than a big hole. And of course, all the trades for the rest of the month were in the green. It's just a matter of time before barbell stocks break out to new all-time highs. Watch this space melt up for the rest of 2024. Get ready to start reeling in those whoppers with Global Trading Dispatch as your guide. And that is a 24-inch rainbow trout, which I caught in northern Nevada. This is how our service works. Back in October, our algorithm predicted an upside breakout, or not back in October, on January 8th this year, our algorithm predicted an upside breakout in graphics card maker NVIDIA. So what did we do? We sent you a trade alert at a market sweet spot by both text message and email. It says buy NVIDIA, not Tesla, buy NVIDIA at $480 or best. It's an opening trade. That's the trade date, portfolio weighting of 10%. Number of shares for $10,000 exposure was 21 shares. What happened? The stock went up 45% in 22 trading days from 480 up to 695. Do we just sit around and pat ourselves on the back and let you take care of yourself? No, we send out another trade alert, and it looks like this. This time it has the right ticker symbol. Sell NVIDIA, take profits, sell at 695 or best. And that's exactly what I did yesterday at the close. It's a closing trade date yesterday, February 5th. We sold 21,000 shares and we made $215 on the trade. That's a profit of $4,515 on a $10,000 investment in 22 days. Not bad. And that's what we do. We grind these things out all year long, usually around 200 a year, depending on the volatility of the market. Oh, and by the way, the success rate on these is 90%. Sometimes we have runs of 20 or 30 trade alerts in a row that make money, but over the long term, the average success rate is about 90%. We have, of course, a long history of Mad Hedge 10 baggers. Okay. Zoom, we got in very early. We made a 10x return on that. Lam Research, the semiconductor equipment maker, we made 10.6 times our money. NVIDIA, we made 18 times our money. We got in at 38, and it hit 690, or actually 700 overnight last night. Square, we made 25 times our money on that. We got in very early there. Moderna, we got in before the pandemic, made 40 times our money there. Tesla, we made 178 times our money going into the stock right after the IPO bombed in 2010. Up 178 times. Our average cost on Tesla there was $2.35. It eventually went up to 283, adjusted for splits twice. Oh, and I did buy Tesla number 125 off the assembly line. I was allowed to sign the factory wall when I picked up the car. Buyers were so rare in those days. And that I drove that car until I got T-boned by a GM Suburban drunk driver. So with the Mad Hedge Trading Global Trading Dispatch Service, you get instant trade alerts sent out at market sweet spots, about 200 a year, and all the reasons to execute them. Live bi-weekly strategy webinars with an interactive Q&A, special reports on urgent investment topics, invitations to strategy luncheons around the world, more educational videos and webinars than you could consume in a lifetime, access to a 16-year database on investment ideas, searchable by names and ticker symbols. I'll even give you the name of a good surfing school in North Africa. Watch out, it's harder than it looks. I broke my nose shortly after I took that picture. Ouch. Okay. This is the one-stop shop. Learn all you need for every experience level. It's for individuals who understand what is happening with their retirement funds. It's for people who want to learn how to trade for a living. Get the financial education of a lifetime. It's for smaller institutions and financial advisors who can't afford an in-house research department. Get in before the next melt-up begins. This is what the service looks like. You get these every day in your inbox, reports, special reports on companies, and in your inbox every day. You also get Mad Hedge Hot Tips, the 5 most important things that happened today and what to do about them. This is what I'm not going to charge you for this service. I'm not going to charge you $100,000. That's what I charge my big hedge fund clients, and they're happy to pay because I make them millions of dollars. And I'm not going to charge you $12,000. That's what I charge my concierge customers who get my personal cell phone number so I can act as their personal investment 911. And I'm not going to charge you $3,500. That's what I charge you on my website, the full price that I'm offering you. This is the real deal. Creating this product cost me millions of dollars with the best customer service in the industry. Running it cost me millions more. Here's the offer you can't refuse. Today and only through this webinar, 6 months for just $997. That is a 71.5% discount to the full website price. This is a limited time offer. We only take 25 new subscribers at a time. So it's first come, first serve. I can't wait to make you a top drawer trader. Just click on the chat box on the right, and David, you can stick in there the link to our dedicated sales page, only available through this webinar. And there it is, madhedgefundtrader.com, blah, 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 2024, it says. So click on that, and I can see a lot of people already have. Let me get over to my phone and see what the interest is here, and I can see there's a lot of interest. Very interesting. Okay, so let me make the money for you to pay for your own subscription. You make the trades. Discover how an experienced hedge fund manager finds and exploits the best sweet spots in any market. Just click on this blue link in the chat box on the right. Okay, here is the offer you can't refuse, 6 months for just $997. Buy now and you will instantly receive a trade alert with an extremely high probability of success. You can execute immediately and make some of the most serious money in your life. Don't leave good money on the table. Some 95% of these trade alerts make money. Okay, and I can feel my phone buzzing as the orders are coming in. And David wrote in here, he's going to post a replay. He's recording each of the presentations individually. They will be available on TimingResearch.com as soon as I can get them processed. Also, you'll be able to find them if you search for Timing Research on YouTube, Substack, or your favorite podcast app. Okay, the orders are coming in. I see we just got a couple in. That's how long it takes people to fill out the order form, I guess. We got one from Barry in Pleasanton, California. Barry, I can see you're a neighbor of mine, so if you want to go hiking with me some evening in the Berkeley Hills, just send me an email and we'll set it up. Okay, let's see. Let me do one more. We have Rodney from Sydney, Australia. Rodney, thank you very much for joining us. Look forward to working with you. And we do have a special correspondent just for covering our Australian customers, whose name is Jackie, and people in Australia know her quite well. Okay, can you guess the trade alert? Here's the trade alert you will get immediately once you buy the service. But I stripped off the prices and the time, so you have to guess what this is, or you can buy the service for $9.97 and get it within 5 seconds of your credit card clearing. You have to go through 1,000 charts to find one this good. Let me do the heavy lifting for you. What I'm not going to tell you is if this is a buy or a sell. So go ahead and get your orders in. The market is open, and you can still get good prices right now for this trade alert. I just checked before I went into the webinar. So again, click on the chat box on the right. Okay, so if you're going to work with me for the next 6 months, probably not a bad idea to find out who I am. My family origins are very humble. Growing up as the oldest of 7 children on a remote farm in Southern California, I lived the all-American childhood playing Little League baseball and becoming an Eagle Scout. That's me up in the high Sierras about 60 years ago. There wasn't much to do in the old days, but hunting. So I picked up a job as a paper boy for the Los Angeles Herald-Examiner. I found the stock pages, bought IBM at 20 and sold it at 30, and suddenly found a far better way than delivering newspapers off the back of a bicycle. At UCLA, I majored in math and DNA research, which landed me a job at the nuclear test site in Nevada. Their yield didn't mean interest paid, but millions of Russians killed. I didn't see much of a future in that, so I went to Southeast Asia for a few years of research missions for the U.S. government. After 10 years of government service, I ended up with this box of medals, which I trot out once a year on Memorial Day. As a foreign correspondent, I covered China during the Cultural Revolution, was the first reporter to visit North Korea since the Korean War, and covered the rest of the continent all the way to India. I figured out very quickly you didn't have to be that smart to make money in the stock market, so I got into the industry, joining Morgan Stanley. After 10 years there, I started my own hedge fund. I rapidly became the top performing hedge fund of the 1990s, bringing in a 1,000% return in a decade. Then the money really started to pour in. It's an understatement to say that when your income goes from the thousands to the tens of millions, it really has a big impact on your lifestyle. I now spend my days pursuing my first love, finding my winning trade alerts, but I now do it from my 3 mansions in San Francisco, Lake Tahoe, and Zermatt, Switzerland. And I've quit turning millionaires into billionaires. There's far more satisfaction leveling the playing field for the average guy and teaching him how to trade. If I can turn a $50,000 account into 500,000, that is more job satisfaction than I could get anywhere. However, every silver lining has a cloud. I had to pay 8.2 million in taxes on my 2021 income of 22 million trading. We only have a few minutes left here. So let me talk to you about one of my concierge customers, and we can watch this video. When you make millions, oops, let's try it again. No, it doesn't want to do it. Okay, let's try it one more time. Okay, when you make millions of dollars for your clients, you get a lot of pretty interesting invitations. $5,000 cases of wine, lunches on super yachts, free tickets to the Olympics, and dates with movie stars. Okay. So it was in that spirit I traveled to the famed World War II fighter station at Biggin Hill in England to meet Mad Hitch concierge member Peter Monk. Peter was a poorly paid pilot for Ryanair when he first signed up for my global trading dispatch. After doubling his money in the first year, Peter upgraded to my concierge service. Then the money really started to pour in. Peter plowed his Mad Hitch trading profits into restoring a 1940 Battle of Britain veteran, a Supermarine Spitfire Mark IX, in his backyard, begging, borrowing, and trading for parts all over the world. He eventually built his fleet up to 16 flying aircraft, which today is worth over $65 million. When Peter invited me to fly one, I jumped at the chance. It was a mild and blustery day, and we took off and headed for the English Channel. Even though the plane was 82 years old, we managed a brisk 250 miles an hour over the countryside. The Spitfire could outmaneuver any plane the German Air Force threw up against it. This particular plane is credited with shooting down 2 Messerschmitt Bf-109s, and it's easy to see how. We found a clear piece of sky over the White Cliffs of Dover between 2 big, fluffy cumulus clouds and commenced a full-on aerobatic flight test. Pilots always want to see what I can do with these old planes, and this time was no different. I executed multiple loops, barrel rolls, chandelles, lazy eights, Immelman turns, and wingovers, careful never to exceed 1G limitation or the wings might fall off. Spitfires can dive like crazy. We dropped from 8,000 feet to 2,000 feet in seconds. Then it was back to Biggin Hill for a perfect 3-point landing and a pint of beer. Let me make millions of dollars for you as well as I have done for my followers over the last 16 years. I look forward to working with all of you. And I'm just going to read a few more subscribers that have come in. We have Eric from Flagstaff, Arizona. Thank you very much, Eric. And get back to here. We have Adam from Durham, South Carolina. Thank you very much. And I can see we're going to hit our 25 target shortly. So if you're sitting on the fence there trying to decide what to do, go ahead and get your order in before we completely sell out.